Hey, hello, how are you doing? I was just testing my microphone. I hope everyone is doing good. It's been quite a while since I was uploading stuff to YouTube, but I'm going to do it again because it's fun and because I heard that people had good time listening to those podcasts, webinars, whatever you call it. I want to talk about retail, as always, surprise, surprise, but this time I want to talk about news. Why am I talking about news? Because I want to understand together with you what is happening in retail. I've been hearing for almost 20 years retail apocalypse, as if the retail is going to collapse. But hey, here's a number that nobody tells you when you sell on Amazon or online, Shopify, Walmart.com, wherever online you're selling. Only 15%. That's what the entire online in the USA, and I'm talking about only in the USA market, that's what the market is, 15%. So where is the 85%? Not all of it is brick and mortar, but very big part, at least 50% is in brick and mortar. Now, why am I saying big part 50%? Because another 30% plus is on other channels, which is also considered retail, but not traditional retail. When I'm saying retail, I'm talking about brick and mortar stores, a Costco store, Walmart store, Urban Outfitters store, a store where you walk in, whether it's outside, where it's in the mall, whatever, wherever it is, and you just shop things. I wanted to buy a couple of shirts last week, and I thought, why don't I just rather than searching and going and parking and everything, just order them online? Eventually, I went to a couple of stores, and why? Not because I'm the retail guy, and not because I think it's better than online. It's probably is, but still, there is no better way shopping to do shopping rather than just going into the store and looking for the products, seeing them in your eyes, checking the shirt on your body, the jeans, the trousers, shoes, bottoms, whatever it is. And it's the same thing not only for garment, obviously for each and every product. If you want to buy a dishwasher to your house, if you want to buy a brand new TV, whatever it is, it's always great to go and touch it. That's why we're still seeing each and every year when Apple is releasing their new iPhone, people are like, crowded around stores all over the world waiting for, the opening sign so they can get their hands on the new iPhone. Well, you could book it online, you could order it online, but no, people want to go there and be there physically. So online is great, but I'm the retail guy, so I will always tell you about how good is brick and mortar. And news. Let's talk about news. So I'm usually surfing on websites which are retaildive.com, for instance. But before that, a quick intro, and we start. Let's start with sharing my screen. This is an article, as you can see, about Target. Okay, this is from November 19, and they are talking about Target trying to pull themselves out of the loop they have been in the last couple of um, quarters, and they're gonna invest $1 billion into the business in 2026. Now, if you read the small letters, you're gonna see a lot of different things here, okay? And obviously, you're gonna see that it's happening after the net sales dropped 1.5% year over year to $25.3 billion. What a drop, only $25 billion. Well, I'm not gonna cry here, neither you will. But then if you scroll down this, again, retaildive.com, there's a lot of different websites. I specifically personally love this one because it's very precise and collecting a lot of very interesting information about brick and mortar. So here is what they say, and this is the important part. On brick and mortar, Target new larger format stores are outpacing its initial sales expectation. They expect one number and they see another number. How does that comes up together with previous paragraph talking about sales dropping? So the drop in the sales is showing 1.5% net sales drop um, third quarter last year, and it's not the first time because they calculate sales both online and offline. Offline, I'm talking brick and mortar. But at the same time, as you can see here, brick and mortar is outpacing its initial sales expectation. That means that they sell more than what they expected. And if they sell more than expected, but still going down in sales, that means that their problem is on the online side of things. Now, you probably heard about Target Plus. Target Plus is what is Target Plus? Target Plus is Target Marketplace. It's where they sell on their platform products from you, the vendor. One of the things I identified very quickly about Target when they just started with the marketplace is that they are doing hard life to their vendors. They don't do it easy. Not only you have to fulfill all the orders yourself, but the onboarding is quite long. And forget about onboarding before you even onboard. When you just apply to the platform, it could take quite a long time. Now, this is not typical for online marketplace. If you look at the winner of marketplaces like Amazon and Walmart, you would see the difference. The difference is that for vendors, it's very easy to operate their store inside the platform. And the reason is because they need you as a vendor and they need you happy as a vendor so that you can sell your products, be happy, make your profit, and they will make theirs. And then other vendors would see, oh, this guy is selling on Walmart. Why am I staying only on Amazon? Let's start Walmart store as well, right? That didn't happen with Target. They didn't had, to my understanding, they didn't had enough understanding about what's happening in the online, in the vendor perspective side of things, what's happening in the online market, okay, industry. So this is what you see. You see an article talking about an increase in brick and mortar sales, which means the stores are doing pretty good, but then overall sales are dropping, and they're dropping because of the online. There's no other conclusion you can get to, right? It's the very obvious conclusion to get. So what I'm saying here is that the retail apocalypse, which people were talking about since 20 years ago and last year and the year before, I hear that all the time. It just doesn't happen. We're all waiting for the apocalypse, but there's no apocalypse. The only apocalypse we're seeing is on other areas, which we'll talk about probably later on, or maybe even in a different session. I just don't want to make this session too long. I want you guys to have some, something light, to open to open the channel, reopen the channel again, my channel, and I don't want to make it heavy. So anyway, Target is one thing. Another thing I wanted to share with you on the news section. And by the way, one thing that I do is checking when I check about, a specific company and I want to see what's going on with them, I would click Target, stock. Then if we take, let's say this is 1 day, so they went up 4%. Oh, that's nice. 5 days, it's going down. 1 month, it's going down. 6 months, it's going down 9%. Year to date, they lost 36% on their stock this year. And that's not because of brick and mortar, as I just showed you earlier. Okay, let's take 1 year. It's still going down less than year to date. So if you will, but it's more or less the same actually. 5 years, wow, they lost 51%. So if you would buy Costco stock in about $179 back in November 2020, today it would worth about half or less. This is very sad for Target. And yes, the maximum when you start from 85 is going 2000%. But you can see very clearly that starting from around 2029, which until that point they went higher and higher all the time, they started to go down. That means that they are in trouble. They need to fix themselves. Now let's take a look, by the way, at Walmart. Okay, talking about stocks. Year to date, 17%. If you invest in Walmart rather than in Target, you would make more money and far more money and not lose money. 5 years, 100%. Not wow, but very nice. But as you can see, they're very consistent. They're going up slow and steady again and again and again. Year by year, they're going up. Okay, since when? Since 1985. Amazing. Okay, I wanted to show you that. But anyway, another thing that I've seen is that QVC launches holiday pop-up in New York City. What is a pop-up? So a pop-up is, there's also Costco pop-ups, by the way, which they are calling Roadshow. That's the name, Roadshow. Pop-up means that they're going to open a temporary store in a couple of places, they're talking here about across 10 rooms, including closet, Kringle. I don't know these places, but anyway, it's a pop up. It's like it's a temporary store, and why they do that is because they want to stay in business. Holiday promotion came amid the retail turn balance for the brand and its parent QVC Group, which had 809 million operating loss last year. QVC is losing money, but don't get confused. That doesn't mean that they are going down. I am working with QVC. We are working with QVC quite a long time. And here is something, by the way, to keep in mind about QVC. QVC is a media company. That's how they define themselves. When you look at HSN or ex Zulily, remember Zulily? Some of you might remember Zulily. They used to be a very big, not dropship, but how would I define that? They were kind of doing drops. They were doing flash sales. That's the term, flash sales. They would take your products, they would dedicate it like 72 hours to your product, showing on their website and another couple of media spots. And then whatever you sell from that, or they sell, if to be more correct, whatever they sell, they purchase from you and they do the fulfillment, which is very nice. At some point, Zulily started to go down because that platform or way of doing business or whatever method didn't really work out well back in 2022, I think, or three. Until that point, we made a lot of money with them, with a couple of bunch of vendors of mine. I hope some of them are listening to this podcast. If you do, drop a like sign, hit that like button if you can. Anyway, so what is happening is that QVC as a group bought them, and they also own HSN. Now QVC has TV segments, they have a website, couple of them, also hsn.com, qvc.com, and a few others. And they also do, as you can see now, pop-up because they want to stay in business. They want to make it, they want to make new stuff all the time. And pop-up, by the way, as I mentioned earlier, Costco is also doing that, and they invited us with a bunch of brands to do their roadshow pop-up type of store. So that means that you're gonna bring them a capacity of goods, and whatever is selling from that goods is sold for you, and they're gonna pay you for that. So I don't really like that business. I'm not a big fan of so-called consignation type of business. Most of the retailers, if not all of them, would not even offer such a thing. But Costco is Costco, and if they open a road, by the way, that's because they're changing location every time they do it, every couple of weeks or month or whatever. That's why they call it roadshow and not pop-up. They want to make it, different concept. So anyway, I'm not a big fan of consignation because you put your products there, you need to wait, you're not sure what's going to sell, and then they need to return the balance to you. In my opinion, there will be no balance with Costco. They are super doing good with sales and how they sell products. Usually they fly products, just like TJ Maxx. They know how to sell. That's their vibe. Other companies are always busy with operational, with being, with being innovative, with being AI driven, whatever it is at each and every period of time. But with companies like Costco, Rose Stores, TJ Maxx, they are really, really sales driven, and that's why they are moving so much goods. By the way, Costco with 500 stores, well, they have more, I know, but let's talk about the main 500 stores would order from you as a vendor. If you get to that store to that point, they would order from you probably 3, 4, or even 5 times more than any retailer with 1,000 stores like Michael's, okay, or 2,500 stores like Tractor Supply. How is that even possible? Again, Costco is sales driven, and that's why their pricing structure is completely different from any other retailer. But so does TJ Maxx. Okay, that's it for today. I don't want to overload you. It's been like a couple of minutes here, and I hope you enjoyed the content. And if you do, smash that like button, subscribe to my channel, and you're always welcome to join our community. There's a link below this video. In our community, we basically share with you everything we know about retail, and not only that, we share with you contacts of our actual buyers that we are in touch with, so you can get in touch with them as well. And we show you correspondence with buyers to understand the process and what exactly needs to be said or not in front of a buyer. Plus, there's a roadmap A to Z how to take your products from online to offline, or from wherever you're selling into brick and mortar chain stores in the USA. We guide you through the entire process. So if you're interested, just look at the link below to our community, retail community, and enjoy your time. Thank you for listening. Have a great day.
Retail wins again.
A fun, a retail.
Blue walking in the store, what do I see? Amazon brands right in front of me. Shelf so stocked, yeah, looking so fly. From click to cart to real life buy. Ding ding, another sale today. Retail wins, hip hip hooray. From online hustle to aisle display, brick and mortar's here to stay. Again.
A fun, a retail.
Blue walking in the store, what do I see? Amazon brands right in front of me.